So I wanted to start bringing some more mixed use opportunities to the table. This is one that happens to be off market.
It's to a certain degree, and Ontario is sort of an anomaly in this, just because there's so many people coming here that if you have a place to live, even if you're not in the GTA, there's just a certain minimum dollar figure for that.
Yeah. You can look across almost all of small town Ontario and the rents are almost identical no matter where you go.
So why would somebody want to own a mixed use building in a place like Simcoe?
Sure.
So there might be an opportunity.
So is there a conversion play here? And that's what we're going to go check out this week. But that's my whole angle with this.
Almost certainly a conversion play.
I think.
All right. Welcome back to REI Hot Seat. Andrew Hines with Jacob Camagnaro here, and we are talking about a deal. Is it on market, off market?
Off market deal.
Off market deal.
Yeah.
Okay. So,
hello, everybody.
Yeah. The right to business.
One of those days.
Yeah, lots going on. Anyways, so I know you guys see a lot of these off market leads and opportunities. So tell me about this one, Jake.
Yeah. So this is a mixed use. And if everybody, anybody that watches our show remembers, we did it, I don't know, 2-3 weeks ago now, maybe longer. We did a whole thing on mixed use, why mixed use is good, why we like mixed use, why we don't like mixed use.
Because mixed use, well, what I recall is that mixed use is not inflated by the whole MLI Select CMHC program, because mixed use, you can't get that.
Spot on. So
yeah, so if it's not inflated, there might be more of an opportunity.
That's it. And so so I wanted to start bringing some more mixed use opportunities to the table. This is one that happens to be off market. We're just finalizing numbers right now, and we will be putting this out to our database of potential buyers. So this one's in southwestern Ontario, a town called Simcoe. So decent town. It's one of the bigger ones in southwestern Ontario, that kind of pocket outside of London and things like that.
It's in like the tobacco belt.
Yeah, it's like the bigger of the small towns.
I was born at Tillsonburg, so
yeah,
that's like sister city there. Although I don't know if I've ever really been to Simcoe.
So that was the big city when you were growing up.
I don't know. Was it? I don't think I've been. Well, I mean, I've probably been through there in recent years, but
yeah, it's nice. It's got some charm. It's got a good taco spot.
Oh, that's all you need.
Yeah, that's right. So buy a building there.
Yeah.
Anyhow, so
why would somebody want to own a mixed use building in a place like Simcoe?
Sure. So listen, it's this building itself. I know actually we sold a number of buildings in Simcoe. There's a great renter population there.
Yeah.
Right. It is more of a blue collar town. It's a farming town. There's a lot of renters in the area. If you look at the average rental income, median household income, you look at the renting population versus the owning population, there's a lot of renters, right? And so that benefits you in, obviously, there's going to be demand for rental. The other thing is this is right in town. So, when it comes to small towns, being right in town is better for renters. You can walk everywhere because there is really no bus or public transit, right? So you don't want to be on the outskirts of town and maybe not have a car or whatnot. So anyways,
this is like right on the main street?
This is right in the center. Yeah.
Like I have a picture in my head and I don't know if it's accurate, but like a street fronting, old school red brick building.
Spot on.
Like that's zero lot line with all the ones beside
Spot
it.
on.
Yeah. So your typical downtown corridor.
So exactly what you're looking at here, right? And so
it's old. It's got does it have the life cycle stuff that an older building has, or has the roof been done? The mechanical's been done? Do you know? Yeah,
there's going to be some life cycle items needed to be done, but it's been maintained well. Like the ownership group has taken care of it. I don't have exact numbers on roof, boiler, etc. We are going to be going for an inspection later this week. But I wanted to get it out because I thought it was something good to talk about. And then why buy a building, any building, mixed use, not mixed use, in a small town? Well, first off, I think your bang for your buck is going much further. Yeah. Right. So these small towns are growing, right? There's a lot of industry coming into southwestern Ontario. Look at St. Thomas with the battery plant. Look at Amazon, what they're doing. Like there's a lot of industry in these areas. And I think it is a good time to be investing in southwestern Ontario.
Well, with the present immigration, it's like if
100%.
You've got a place for people to sleep, then that's value, because even Simcoe could be a bedroom to Toronto, although I wouldn't want to make that commute. But if you're in the crowd that can work from home 4 out of 5 days a week, I'm sure there are people who just commute in once a week.
And then, and even look at the development that's happening in the surrounding areas. Like, again, I always go back to this, but look what Empire Homes did with Hagersville. Like they built 1,000 homes out there.
Did they?
Yeah.
I didn't
massive
know.
Subdivisions. So like there's growth in these areas happening.
Yeah.
Right?
Yeah, that's the interesting thing. Like there are places, even Binbrook is, well, it's not that far away, but it's like off the beaten path, but it's this massive community.
Yeah.
Like there's lots of those popping up, you know, outside of Waterdown, you know, that's south off the highway, off the beaten path a little bit. Or sorry, not Waterdown. I was thinking of, what's the Welland?
Welland.
Not Waterdown. Waterdown's right in the middle of everything.
Yeah. I was going to say Waterdown. Yeah, I'd buy there.
Yeah, I'd buy there too.
No, but listen, so at the end of the day, like I said, I think you're getting bang for your buck in these areas. You're still going to have renters. It's funny because you can look across almost all of small town Ontario and the rents are almost identical no matter where you go.
I've actually had a similar observation. Yes.
Right.
So
like
I would agree with that. A lot of commonality.
There's a lot of commonality.
You'll
right?
see a ballpark.
Yeah. Right. And you can go to, Wyerton, Ontario, and legitimately the 2-bedroom rents are going to be the same as the 2-bedroom rents in.
What's your prediction? Because I want to look it up.
Like Brantford.
What's Wyerton's 2-bedroom going to be?
Maybe Wyerton's a bit small, but no, I would say.
It's still going to be like, I'm guessing, 1,600.
1,650.
Yeah, right in there. Yeah.
And what's the 1-bedrooms? They're like 14.
1,350, something like that.
That's it. Like across the board.
Could, if it's older stuff, I'm talking like
no older
nice
stuff. Yeah, listen, new product, you're going to get 2.
You still get 2, right?
Yeah. Sorry, guys.
So even in those towns you could, and I agree, like it's to a certain degree, and Ontario is sort of an anomaly in this, just because there's so many people coming here that if you have a place to live, even if you're not in the GTA, there's just a certain minimum dollar figure for that.
Yeah, exactly. And so if you're going to get the same rents and you go to these different towns, then why not find a smaller town, go get those rents. It's growing. The population's growing. There's industry in the area. It's not like we're a one-horse town here that, is going to lose all its jobs overnight. But anyways, coming back to it. So this building in particular is, yes, the pros are you're coming in. It's not CMHC applicable. So that means that your cap rate is going to be quite
higher,
quite favorable.
And do we see that here? I'm just going to.
We do. Yeah.
Yeah. So I see a cap rate of 6.7 off the hop.
6.7%. We ran it, I would say, fairly conservatively.
Okay,
right?
so in terms of running it conservatively, what was conservative? Or just base rents, or was there something else?
Yeah, so commercial rents. There's only one commercial vacancy right now, which we're working on, and I think we plugged in $800 a month in there.
Yeah,
right?
Shannon, could you pull up the commercial rents tab? Well, actually, the rent roll. My apologies.
There you go.
There you go. Rent roll. Okay, so we've got 7 units, mix of 2 beds, mostly 1 bed's, a bachelor, and then so 2 beds, 4 1 beds, and a bachelor.
Yep.
And then
Decent
we've got 4 commercial units. What kind of tenants do you have? And I know I have something in my head, but what kind of tenants would you have in units like these?
Yeah, this one has an interesting tenant mix. So the first commercial tenant there, that's 900, give or take. It's a Magic Emporium. That's what it's called. So it's like they sell like magic items and
yeah,
stuff.
you're gonna have an interesting mix. Like I was thinking either weird stuff, like small little mom and pop food joints, or you'll have like an insurance broker office, mortgage broker office, that kind of thing.
Yeah, and then pot shop. There's always pot shops. This doesn't have one, funny enough. But it has that spot, and then next to that, there's a children's clothing store, and then next to that there is one other tenant, which is escaping me right now. But I will come back to that. We'll figure it out.
Right. So we get an idea. We have an idea. Yeah. Okay. So that's what's in there. And you can look at these commercial rents and you see they're pretty affordable. So it's not like you have to make a crazy amount. These aren't like overly like crazy rental rates right? Like, on these commercial units.
I've done commercial leasing in Simcoe, and I know you can fetch upwards of 1,000, 1,200 for these units.
Well, how big would these units be?
They're like 1,000 square feet.
Yeah. Okay.
Right. Like they're not huge, right? They're the typical.
I mean, you have a little shop and you don't tell anybody, and you have a cot in the back.
There you go.
Shower in the sink.
Well, so that's one thing. And then I also know the zoning in Simcoe allows, or a lot of the zoning, and we're digging into this right now, but a lot of zoning in Simcoe allows residential on the main floor as long as it's
can't
not
be on street fronting.
Yep.
Yeah, same thing in St. Thomas. I know a friend was getting away with that. So just cut it up and have a window on the back. There you go. So there might be an opportunity.
So is there a conversion play here? And that's what we're going to go check out this week. But that's my whole angle with this.
Almost certainly a conversion play.
I think you can reduce that commercial space.
Even cut them in half, throw in a couple of bachelors or even 1 beds at 500 square feet.
Yeah.
That's
And now
still a
you're-
decent one bed.
Yeah, and now you're doing a retail at 500 square feet, which is still plenty of space for retail. That's a small little bookstore. That's a little shawarma shop. That's whatever you want.
Sure.
Like that's 500 square feet. So we have to explore that conversion play angle, which I love.
Yeah.
And then the other thing is just where you're purchasing that. So we can go back to that sheet there. So you'll see 6.7% cap rate.
Okay.
We're running it with conventional financing. So we're looking at the most 30-year AM, right?
Okay, so 30-year AM, you think that's doable? You can
I
find some
spoke
lenders?
to a couple brokers and they said, yeah, they go mixed use, commercial, tertiary market. They said it's 30 would be the absolute most.
Right, but
they said you can try a 25, you can try a 30. That's where we're going to be.
And aren't we normally
here.
limited to a 65% loan to value? Or you think this is in
Well,
here
it's
at
debt
69?
service.
Yeah, I know a lot of mixed use though. Lenders just want to cap it at 65. You have
do,
lines
some
on
don't.
higher.
Yes,
Okay.
you can go higher.
Okay.
And so you'll see we're running at a 1.3 debt service.
Okay. Yeah, I'm gonna go down to the debt service line. Where is it?
There you go. Over and up.
Over and up. Oh yeah, I got 1.3. There we go. Yeah.
So 1.3 debt service, right? So your interest rate, let's call it 6.5, just to throw a number in there. Could be less, could be slightly more.
Yeah.
But if you're a 6.5 interest and a 6.7 cap, your cap's over your interest rate, which is what everybody's looking for in this market right now.
Yeah.
Now the other thing we have here is there's a potential VTB on this one.
Yeah, well, and
Right.
right now the VTB is included.
It is
right
included.
now it's shown at 15%. So the seller's willing to do this. So if you could get the bank on board, there are some lenders that are willing, as long as it's still debt services, which we can see here it does.
Yeah.
So hypothetically, this could be done. Now, what loan to value does that get us to? Well, you'd be around 85%. So you'd be coming in with the other 15. So if we go up here to the table on the top right, Shannon, if you can scroll over to that, it might be off the screen, but you can
And then just scroll up from there. There you go.
There you
That's
go,
the
right
one.
in the middle. Okay.
Yeah.
So we've got land transfer, all that stuff calculated. You got your down payment in here. So this is if you take the VTB, you're like 250 in.
Yep.
Calculates the cash on cash at 4.3%. Cap rate's 6.7, as was said earlier. Overall return at 22%.
Yep.
And
Based on
that's
year
factoring
one.
2.5% appreciation. So,
So drop that to 1.
if you drop that down,
It'll be 15% probably ROI
yeah,
or something
15%.
like that.
Yeah.
Yeah,
So the real play is in getting the extra units. So,
For sure.
so a
And
little bit of a
I think
burr
the real play is you can also increase the rents across the board.
Well,
Right.
yeah, if you go back to the rent roll tab, you'll see that there's a 636 rent for a 2-bedroom. It's either a terrible 2-bedroom or if it's just really under rented.
Yeah, it's under rented.
Yeah.
And listen, in theme of this year, which is boring real estate wins, right? I don't want to sit here and say, yeah, we're going to crank all these rents up and do this and do it, because that's just not what's happening.
Yeah, the
right now.
rapid pace of the crazy appreciating market of the past 4 years just isn't normal.
Yeah.
And it put people in
People just don't
it's
want to
set
talk about that right now.
expectations.
It's not fun, right? Like that's not a good strategy. Like in my opinion, some people still are doing that. Great. But like I think you need a 5-year play minimum right now.
Well, unless you're buying at ridiculously
vacant or-
under market, or you have some sort of angle, like you run it as a business. Like there are ways, but for the average person or average investor, no, that's not that feasible.
Yeah. Well, and that's why. So you look at the conversion play here, you got one vacant commercial unit, right? So right off the bat, that would be my first exploration is, okay, what can we do with this? Can we chop it up, do the back as a resi? Now we're adding already one more unit, call it a bachelor, call it a 1-bed, whatever. On top of that, you have increases in rents, right? We can look at rental increases. If people move, we can increase that as well. If retail moves and you want to put a little bit of money into the retail portion of it, you can increase those rents as well. And I know that because I've done leasing there, like I said.
Yeah, I mean, I'd be most into the conversion of half the unit and
big
stuff
time,
like
big
that.
time.
I think that could be.
But again, I think
fantastic.
I think all in all, Andrew, you're coming in at the right price, right? You're having a little bit of cash flow, some decent cash flow on it, right?
Yeah.
5%, 5% is what people are targeting for cash on cash return in Ontario right now.
Yeah.
Like that's usually what people look for. So we're getting almost 5% cash on cash return,
Right.
and that's at like
with,
full asking.
with potential for upside.
Yeah.
Or if you can get that conversion.
And if
done.
you don't take the VTB,
it could be a little higher.
I think you were 5% if you don't take the VTB.
Yeah, I don't think you're over 5. I can run that number.
4.6. It was 4.6.
4.6 versus I can run it. So Shannon, if you just pop over to that table again, I took the VTB off, and now the cash on cash is 4.6%.
Yeah. Go right.
Just over to the right
And up.
again.
There you go.
Yeah. Just
right
you
there.
can see right where it's selected, where my cursor is.
Yeah.
Yeah. So 4.6 there. That's obviously it's still not anything crazy, but the play here, as we've said, would be it's either boring, which plenty of people are good with, because who knows down the road, maybe appreciation picks up. There's different plays. You let it pay down. It's boring real estate. It's still 10% of a plus overall return. But the nice thing is you can really crank that return up if you do a little bit of active appreciation in converting those units, if it's possible.
And listen, and you take the VTB, you're $250 to close the deal, or $250 down payment. You're probably $300 total to close the deal.
If you want to close the deal without the VTB, you're $496. So it's according to this sheet. Obviously, check with your lawyer before you close. Yeah, but that's it's a significant different downstroke.
You can. Here's the thing: you can go refi your house. You can take a HELOC. You can and get the down payment to buy this. Right. So people come to me and they're always saying, oh, I find it so hard to get into the commercial market. I can't get into the commercial market. I don't have the down payment. Yeah. It's like these opportunities are out there. Right. Here's one. Here's a perfect example of it. Is it the prettiest building? Yeah. Absolutely not. Right. Is it downtown Toronto? No. But does it have factors that make it a good investment that's going to keep the return coming? And if you hold it for 5 years, are you going to make profitability off of this? 100%. Right.
Yeah.
Or at least
I would sure think so. I mean, no one can guarantee
100%
anything.
a bit strong. But no, again, I think you're buying at the right price in a down market. And if the market was to recover, you're going to be at a good spot.
All right, Jake. So this one is showing as a 1.6 million purchase price. Is that just the asking price that you were given?
No, that's our number that we came up with.
That's the number that you came up with? Okay.
Yeah. So in pricing this out, we basically ran all of the numbers ourselves, went back to, because I asked the seller, I said, what do you want to sell for? They go, I'd prefer you to give me the number.
Right.
So we went back, we did our math, and we
figured this is where it's at.
Yeah, right around here, right? I think, listen, there's some liberties here, right? If they give the VTB, maybe they're going to give them more VTB, but they want a little bit more on the purchase price, right? Maybe we do a little bit of negotiation on the purchase price. Yeah. I'm trying to show it just in, hey, what is the realistic sale price for this property, right? Nobody's giving real estate away, but at the same time, I think this makes sense. And I look at a lot of deals and I look at this and go, yeah, this makes sense for a mixed use property in Simcoe, Ontario. You know what I mean? Like, I don't know. We have comps. We pulled some comps. The dollar per door works. The cap rate works, right? Everything to me looks good for this. So now it's just about who's the right buyer for it, who's open to owning in that town, who likes this deal structure or has the capital requirements to purchase. That's what we're doing with this show, and that's what I want to go find now. Yeah.
Cool. All right. So if people want to know more about this one, we just send them to the link and they opt in, and then they'll eventually get in touch with the team.
Yeah.
Okay.
Yeah. And so this is one of my own listings, right? So if you go to the link below and you say, hey, I came in off of the mixed use episode, I'll more than likely speak to you immediately, and we can talk about this, right, while it's still available. Okay. And yeah, any questions whatsoever, like I said, we're still finalizing our due diligence. The spreadsheet might change, right? Yeah, small things here and there. But the material facts are the material facts, right? And those are pretty straightforward.
All right, awesome. Well, Jake, thanks for sharing another deal. You've got lots of these, so it's great. Gives us a lot to review.
We'll keep it going. I'll see you next week.
Yeah. Thanks, everyone, for making it this far. Please show the channel some love, and we will see you again next week.